Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been a full-time trader for over 13 years. We're going to continue to follow along with GME. We'll talk about the recent fundamental developments, but more importantly, the charts and the technical levels that we're watching here for the rest of the week as we head into the FOMC this afternoon. Let's see where we stand. So on our YouTube channel, I now made a GameStop playlist for the content, make it easier for you to follow along. I did a long live stream a couple days ago talking a bit more about my lens and how I'm viewing GME, talked a little bit about the analysis, talked about how when we get the headline that GME has sold 75 million shares, that's a bullish catalyst, which we saw yesterday into yesterday after hours. Jungle Funk Joey did an update yesterday for you all, and here I am doing the most recent update. So the news out of today is Citron is no longer short GME. Now, reading this tweet, it's not because we believe in the company and blah, blah, blah. The last sentence here tells me that he still doesn't get it. By the way, the Kitty live stream was still an insult to the capital markets. He doesn't understand that that is the entire point of the entire movement. And so he's taken another loss, shorting GME. Now, keep in mind that this news is not bullish GME. We would rather, if you're long, if you're a bull GME, you would rather Citron still be short because that means they still have to cover. Their buying pressure still has to happen. And so we know that some of the bull move from yesterday's lows, the $23 range, was Citron covering their short. So it almost tells you, it's the exact opposite of the share headline from GME. GME says, hey, we're done selling. Our downward pressure on the stock is done for now. And this headline is saying, hey, Citron short covering is done putting upward pressure on the stock at this point. But again, the main takeaway still doesn't get it. Clearly, Roaring Kitty is poking fun at the capital markets with this entire thing over the last 3 years. So where we stand right now. So in the live stream from a couple days ago, I talked about how the most likely scenario is the weekly equilibrium, and we would be scouting a higher low between the low 20s and the most important support of 1770. Unfortunately, I was floating down a river all day yesterday with some friends and not watching the markets at all, no service. And just an example, back in 2017, 2018, when I was my most aggressive trading, I would have skipped that float and I would have been focusing on trading. I went so far as to not touch a woman for an entire year, knowing that I was going to put the capital markets and trading as my top priority. Different. That's just the different for me. Aggressive to conservative and less focused on the market. So I missed a long opportunity with the break of the low of Monday with zero follow through and the bull move all afternoon. And I know Joey and a bunch of other people, other Chart Guys traders, were all over that. So that's great. But what does that mean? So that means now that any trades that I'm taking are based on the more prominent short-term action. And again, make sure you're following us on Twitter. Posted this morning right when the bell rang, the key ranges to be watching here. So the ranges pre-market are very clear. We had the low after hours, 2780, the low of pre-market, 28. And the resistance very clear as well. Topped out on the GME done selling news, 3234, and topped out the high of pre-market, 3180. So those are the key levels to start the day. We're either going to break support and pull back or break resistance and look to follow through. And so every trade that I took today was based on these two ranges, at least initially. And so I ended up with a little bit of a late entry. We had the morning, we held the low. Again, let's just draw those levels so we can see the pre-market levels and how they came into play first thing. So on the 1 minute time frame, again, when you're this volatile, the 1 minute time frame is where you want to be, especially when the bell rings. So we held support by 35 cents. We then held the low of the day and hit a new high of the day. Again, in the live stream from a couple days ago, the trade that I gave as an example would be longing the new high of the day, putting your stop under the low. That's a good amount of risk, percentage-wise. That's almost 5%, but you get that 1 minute stair-step follow-through and a nice trade there. I ended up being a little bit late to this trade and entered 29, low 29, sell a partial position. I still have a runner at this point, and my mindset for my runner is Let's see what the bulls can do with it here. But keeping in mind, we got the FOMC reaction at 2 p.m. Eastern today, and that's going to have an impact on the market. The market overall is in euphoria mode right now. Microsoft all-time highs, NVDA, Apple, NASDAQ, S&P 500, all at all-time highs. So making note that that's where we stand from a bigger picture perspective. But right now, GME is looking for a 15-minute higher low to form. And if I wanted a long entry, I'm starting to pay attention to the 2-minute downtrend, looking for a pattern to shape up that shows us a 15-minute higher low is taking shape. We are retracing more than the bulls want to see right now. This is a little bit of a red flag in the short term, because if we set the 15-minute higher low here, we've got space for a potential 15-minute lower high to be the result of the next bounce. Again, you've got to determine what time frame is most important to you, because if you care about the daily chart, the 15-minute chart doesn't mean a whole lot to you. So just keep that in mind. But we're looking for a 15-minute higher low right now. Bigger picture, if we are going to break $48 right now from, again, just my history of technical analysis, everything I have in my brain from the last 13 years and thousands of trades tells me that a daily lower high compared to $48 is the most likely scenario of this bounce. And the only way that we're going to head up and break 48 from here is on very high volume. And right now today, I can see that unless something changes here, it's going to be lower volume today than yesterday. Right now, we have just over half of yesterday's total volume, and we're more than halfway through the day, but generally you get that big surge of volume at the open. So I'm watching for a daily lower high compared to 48, anticipating that this weekly chart is likely going to keep tightening up for a while. And again, keeping in mind that that can take place for a lot of June. I will change my tune and change my opinion if very high volume starts to come in. There is still massive opportunity in both directions. I will continue to favor bulls because, again, that's where my edge is as a trader. I'm better trading long than short. And because mathematically, that's where more opportunity is. This huge pullback over 2 weeks is the same percentage as this 2-day bull move. This pullback from the high is the same percentage, 4% more, 52% pullback. There's a 48% bounce. It takes much less for the bulls to put up the same percentage as the bears on these very volatile names. So just rough trade example, what I would want to see right now if I'm trying for a 15-minute entry is I want to see a big enough bounce here to shape up an inverse head and shoulders. I want a bull move up towards the mid 31s. I want to pull back. I scout my entry on the right shoulder for the higher low. And then we need to confirm a 2-minute uptrend for the 15-minute higher low to be set. And if I take that trade, I don't even know if I'm looking for it. I need the bulls to show me, okay, scout that trade. Then I scout it, and I know I'm wrong if the low breaks at that point. But first things first, have to see bulls put up at least a short-term bounce here because we have a very clear 2-minute downtrend as our guide, lower high, lower low, lower high, lower low. And we're just watching this 2-minute trend to try and shape up a 15-minute higher low. And then we watch for potential 15-minute lower high because of the size of this retracement. So determine what time frame you care most about. As a day trader, I am caring about the short-term time frames to try and position, and then I zoom out and say, all right, well, I hope this runner can run a bit because the next major resistance zone we have, aside from the high of today, which is now 33.70, the next major resistance zone is not until the $37 to $38 range. And I find that by looking back here, all right, Friday on the way down, there was a lot of price action in the range of essentially 34 to 38, and we topped out. Look at all these tops on the way down. 38.45, 38.48, 35. You get the idea. There's a very clear little short-term resistance level there. And so that's the next place to be watching if we get continuation. But personally, again, just to wrap it up here in summary, watching for a daily lower high unless big bull volume starts to come in. As always, we'll continue to follow it step by step as long as this volatility keeps coming because there is significant trading opportunity. And again, I talked about how this week my trading is going to slow down a bit, which it has, but still plenty of volatility out there. All right, let's see what we get. I know a lot of people are saying, exercising his options is going to take this to all-time highs. If that's going to happen, it has to have high volume. So, you want to keep it simple. Volume will tell us if that's happening or not. Because if volume stays declining, it's not going to happen. It's not possible to happen on declining volume. So on names like this, pay extra close attention to volume. It's one of my favorite indicators overall, but certainly when you have something this volatile, it becomes extremely important as well. Hope you're well, do good things, keep up the likes and the shares, and we'll keep pumping out GME content.